Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes. It is Saturday, the 12th of November. Starting off with the FTSE 100, where slightly disappointing to close the week just below the 200-day moving average, around 73.30. We have also come back off 7,400 twice. It's bearish divergence in the RSI window, so that's a signal there. We had that there back in August, and hopefully the decline will not be so great if there is one. Support initially around 72.30, the initial November support there, and then below that the 50-day line at 71.10. Ideally, though, this week we managed to have another attempt or two break the April resistance line, top of that falling trend channel from last December, around 74.60. That's the key level. If we can get through that, then it may be 7,600 and even beyond, snapping what's been a rather tough year in terms of the market trying to take up the slack of the post-COVID ascent. So basically, this 2022 gives the impression of being the one where there was a consolidation of that rally from down there in what was it, the mid 5,000s up to 7,600 or so. So let's see how we do there. On to the DAX. It was a prettier picture for the end of the week. Here we hit that target that we had once we reached the 200-day moving average around 13,600. We're looking for 14,300, and we just about managed to get to that area. June resistance line. Getting through 14,300, though, there could be a new leg higher up towards an April resistance line there. That's around 15,300, and that would be hopefully our end of year target. In terms of the level we need to find support above, that would be the old August resistance in the 13,800 area. So that is the map on the DAX. On to the Dow, which managed to consolidate its 1,200 point rally that it managed on Thursday. Also held above the top of that gap there, around the 33,100 level. That's the key area now. Above that, we're looking for even greater glory up towards 36,000, and that 36,000 derived from a May resistance line projection. But key here, staying above 33,000 basically to get up to 36,000 on the Dow. On to Bitcoin, which I suppose you call it BTC, but more accurately at the moment, FTX. The fallout there giving this market a, what's that, sort of $4,000-$5,000 fall, peak to trough. We were worried that while we were below 18,000, which was basically post June support, there's still the chance of a fresh leg to the downside, perhaps down to that June support line projection currently around 14,200. So below 18,000, looking for a potential 14,200 downside there. RSI has been down to oversold, which normally is the low, or at least a temporary low for the market. We had that back in June. That worked rather well. And also back in the early part of September. So there can be a rally off that. But 18,000 looks to be the cap, at least initially. An end of day close above 18 would take us back up to the 21,000 area if people can shake off that FTX stress. On to the stocks. And the first one this weekend is Harland and Wolff, which was enthusiastically requested. I think I covered it earlier in the week around the 7 pence area. We managed to break that line of resistance from August, which was welcome. And the next barrier there, the 50-day moving average around 7.75. But great end to the week, and the initial target here up to 10 pence. Hopefully done in the next 2 or 3 sessions. Above 10, it could be up to 15 by the end of the year if this is indeed a proper turnaround. What you normally see in these situations is 7, 10, and 15, and then actually 25 and 40 is the sort of progressions in the best of these situations. But let's just go for 10 and 15 at the moment, while we're above recent 7 pence support. Moving on to the Aquas Market, one of the or one of the few, rather, let's be more fair, one of the few higher performers or better performers on Aquas has been Hardide Utopia. Here we've had the big breakout this month through the 8.5 pence level, which was an August resistance line. Nice V-shaped bull flag to end the week, so solid end to the week there. And that could take us up to not only the 13 or 14 pence we were looking for previously, but even as high as 26 pence at the top of that, at that January resistance line projection. If you're looking for the near-term target, that was derived by that line there, which I previously drew. So 14, because 14 pence broken could take us up to 25, which is basically the same 15, 25 type of progressions. In fact, here we also had 7, 10, 15, and hopefully we'll get 25 there as well. Moving on to Ince, which I think one or two people have noticed of late. Here we seem to be bottoming out after a very painful looking decline. Just readjusted the top channel there, the top of the resistance line there, that one from the end of July. So that looks as though we could get up to around 9.5 pence while we hold above the initial November resistance at 6. So something to bear in mind over the next week or two. So hopefully up to the 10 pence level would be much appreciated after the extended declines at Ince. MusicMagpie was a stock which seems to be quite mesmerizing at the moment. Here we've got another situation. We're coming off a hefty decline here. The weekend is just nudging the 50-day moving average around the 16, 17 pence, well, 16 pence level. Above that, we're looking to try and fill the gap up towards the 27 pence level. There's a line of resistance there also at 23, so you can make up your mind which is the easiest target to hit. In terms of support, we've got the midweek support around 12 pence, so above 12, looking for 23 and then maybe 27 on MusicMagpie. Moving along to a stock which I don't think I've covered for a little while now, Parkmead, but seems to be improving. Great breakout of that resistance line there on August resistance line there on Thursday. That was around the 56 pence level, and we've just retested last month's resistance around 65. Break of 65 could take us up to the top of the July rising trend channel as high as 85 pence, maybe as soon as the end of next month. But the key here is holding 56 pence plus over the near term, and ideally not even going back below the 60 pence level. One of the decent performers of the recent past has been Pineapple Power, which it's always good when a stock actually beats your target. So we broke that line of resistance there at 1.75. End of last month, it easily melted through the 50-day line, now rising around 2.25 pence. And we had a target there at 4, but managed to close the week at 4.3 pence, and also close above that July gap. So it's a gap close buy signal on a technical basis, and so above 4 pence. Looking for as high as 7.5 pence. And interesting that from memory, this is a cash shell, and I suppose in a time of liquidity difficulties, cash shells should be the most popular stocks in town. And so far, Pineapple trying to underline that point. Good chart over the recent past from Poolbeg Farmer. The rally here started with an unfilled gap to the upside through the 50-day moving average last month, but another unfilled gap to the upside this month. So 2 is pretty good stuff, and that classic stairway pattern, stairway to heaven, I suppose, but stairway pattern where you have a vertical move, then sideways, and then a vertical again. And here we're looking for a February resistance line projection at 10 pence as soon as the end of next month, and maybe if we're lucky, the end of this month. Ideally, we stay above the October resistance at 7.5 pence while we try and get to 10 pence. But I think situation there helped by the fundamentals in terms of news flow as well as direct buying. On to THG, which continues to baffle maybe the doubters over the recent past. So had a good November so far, consolidating the October rebound, and above that October peak at 65 pence. We're looking for further gains. They could be towards the £1 level, which is the top of that falling trend channel from May, and maybe we'll see that by, well, I suppose over the next 2 to 4 weeks at the current rate of progress. So let's see if we can hold above 65 in the meantime. On to Tlou, which has also revitalized itself over the recent past. One of our favorite signals is an unfilled gap to the upside, and we've not only had that, we've had a couple of those actually for Tlou since September, and that completes the island reversal, in fact, that we had up on the basis that there was a gap down in September. The share's a bit gappy, so maybe it's not as significant as it normally would be, but we've hit a resistance line target there at 2.1 pence, which is very pleasant, and above that, looking for 2.8, the upper parallel there from the beginning of the year. And that could be seen by the end of next month. Upside valid, especially while we hold above September resistance around the 1.85 pence level. So encouraging moves there. Just a couple of stocks to go now. First one is Velocity Composites, where we managed to get to our first target there around 26 pence, above 26, looking for a new level now as high as 38 pence, which is the upper parallel there from this time last year. So above 26, looking for 38 on Velocity Composites. The rally started there with a gap closed buy signal and then another gap through the 50-day moving average. Finishing off with a stock which continues to be battered by the bears, but over the last month or so at least, things seem to be rather better. We had a gap close buy signal at the beginning of this month, so closing above that gap down at 14 pence from October. We're now well above the 50-day moving average at 14 and 3/4 pence, and above that, looking at least initially for a visit to the 200-day moving average. That's been the resistance over the last year, so it would be surprising we weren't able to get up to that 18 pence level. In the event that we've got a trend change, then above 18, looking for 26 pence maybe over the next 1 to 2 months. But the key here, holding the 50-day line at 14 and 3/4. That's it for me today. More updates during the week.